All right, today was quiet, a little quiet ahead of an expected volatility storm we have coming up later this week. Probably will be a little bit quiet tomorrow, but then what? Then what do we expect to see? What's going to come out of the midterm elections? What kind of results would the market prefer to see? And does the expected response to the results, does it fit within what we already expect to see just from looking at the market forecast by itself? Let's talk about that. Let's go ahead and get started. Today is Monday, November the 5th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's get right to it with the market forecast indicator on the S&P 500. You see we continue to rise. The intermediate line down here continues to go up. It's not above 50 yet, so we don't have the dark green shadings. And as I mentioned before, during these intermediate pullbacks, you'll get kind of these stripes of dark pink, light green, dark pink, light green, dark pink, light green before it turns dark green. And as you can see, most of the time stays dark green. So, or alternates with some light green or light pink in there, or a few little stripes of light pink. So we are still in the mode of dark pink and light green. We haven't got that dark green shading yet, which is the intermediate line getting above 50. The near-term line is pulling back, as we talked about last week. It hasn't pulled back below 50 yet. It has on the NASDAQ, thanks to Apple. You can see the NASDAQ is down. The Russell 2000, it's barely below 80. It's just barely, a smidgen below it, 79.63. So now you go back to the S&P 500. So it's not quite there. Most likely will be there unless we and it's not going to break out tomorrow before the election. So it'll be Wednesday before we really get any kind of knee-jerk moves in reaction to election results tomorrow night. Until then, you're going to get really quiet here, and 2700 is going to be your lower end. But you remember the strongest supports at 2600. That's Monday's low point, where you had the change in sentiment there. Because when I say change in sentiment, we had dropped from 2750 down to 2600 really quickly, and in a matter of a few days regained it. So big significant change in sentiment there to regain that kind of fluff, the divergent low point that we had. So of course, as I mentioned before, when the intermediate line gets above 20, the near-term rallies don't last very long. It needs to get up above 50 here. Then you get those near-term rallies, the expected rallies of about 7 to 12 days. The blue line crosses above 50. You expect it to stay in the upper half of the chart for 7 to 12 days, especially if it gets above 80. Need to get above 80 sometime during that run. So we did get above 80 on this one, and it's going to pull back after a few days like it is. In fact, we've got how many days now? This would be 1, 2, 3, 4. We got 5 days. So we're actually getting close to 7, but I doubt we'll make it. We'll probably end up finishing at 5 days if it continues to pull back and we trade down towards this 2700. We're not gonna break out of 2750 or 2700 tomorrow. So it's just gonna be a matter of where do we trade. The breakout's gonna occur after, right? And remember, knee-jerk reactions. If you break down below 2700, you still have all this range to trade in before things really hit the fan. You can sucker a lot of new bears into it down in this range before making your run back higher again with a new higher near-term low point, right? Because the near-term line, once it gets below 50, you still got 1 to 3 days of it being down there. So let's say it gets down there tomorrow. You can have by Friday, you can have it down there until Friday and still be kind of normal as long as it finishes with a new low point higher than this last one that we had. If you take a look at the Dow, it looks very similar. The NASDAQ looks a little bit more bearish in the short term. And then finally, the Russell 2000 is actually a little bit more bullish in the short term because the near-term line hasn't fallen. But regardless, it's all the same pattern, right? A weak bullish posture that's not strong enough to change the trend, the intermediate trend yet. Has to get above 50 first. Near-term lines are pulling back to what could be a higher near-term low point, and that's the process that we're in right now. And as mentioned, that near-term pullback, typically, regardless of whether there's an election or not in there, typically a near-term pullback in this environment would last about 1 to 3 days. It would get below 50, ideally not below 20, and then bounce back higher, and then eventually off of what would be a higher near-term low on the index itself, and then you would expect a new higher near-term high point to occur with a rally back above 50 in the near-term line into the upper reversal zone, and then you can start to get those expected 7 to 12 day windows. You might, because of how far down we are, we might get another one of those 5 day near-term runs before that intermediate line finally gets above 50. Then you start to get those 7 to 12 day runs. Okay, before we look at some more charts, a reminder for those watching the Market Outlook on our blog, click right here, 3 clicks, click right here on this heart that will like tonight's Market Outlook tweet. The second click on this icon right here, that will take you to your Facebook page. You can like the Market Outlook post there, and then the third one is click here. Those 3 clicks tell us you want us to do this video again tomorrow. So really quick and easy way to give us feedback. You can do that right now. Remember, you have our schedule of classes. Tonight's class from Brandon here, options for long-term investors, and then this really popular dividend growth investing class tomorrow morning, and then my directional option strategies in the evening tomorrow. You can discuss the Market Outlook in the forums. Remember, you have to subscribe to our site to participate in the forums. You can do that for free by clicking on this graphic right underneath Join Market Scholars. Also, subscribe to our YouTube channel. Mouse over our Market Scholars logo right here, then click that red subscribe button that pops out. Click the thumbs up icon that's down below the video. Another quick and easy way to tell us you want us to do the video again tomorrow. Comment down further below on anything that stands out to you from tonight's video. Join our daily Market Outlook email list. There's a link popping out in the top right corner of your screen. Click that link to subscribe. Really easy way to do that. Follow me on Twitter for more content like this throughout the day. Join our Market Outlook community that we created on Facebook. All right, now we take a look at the long-term view. You see that beautiful long lower shadow last week, and as of right now, closing. We're not trading above yet last week's high, and that's really kind of the need to get above that high to really complete any kind of reversal. And I wouldn't be surprised if we don't come back down into some of this range first before that happens. But you can see we are trading above that 200-day moving average again, still below a falling 50-day, so it's not all roses. And there's your Dow Jones Industrial Average, which actually is getting close to its 50-day. And then you can see some of these others. The death cross appearing this week on the Russell 2000. We'll see, how long that stays if we don't get back up above both these lines, either here this week or next week. If you take a look at the 3 green arrow chart here, we have 2 green arrows on the S&P 500. When you look at the 2 line versions of these indicators, that MACD and stochastic are still rising pretty sharply. Stochastic is now above its midpoint of the chart, which means the intermediate line has a pretty good chance itself of getting there too. They're very similar to each other, the intermediate line on the market forecast. You can also see that the MACD, we're still trading at the 17-day. That's you hit the 8-day, you bounce off of it. You hit the 17-day, you bounce off of it, which we really haven't bounced too sharply off of it. So there's still that possibility tomorrow into Wednesday and Thursday potentially on a knee-jerk reaction out of this election results. But that would be your next step. And again, as mentioned before, a lot of times you get these convergences back to zero. And if not, there could be divergences, MACD divergences down into this 2600, more into this 2600 level. Here's today's intraday move. Really, really small range inside of yesterday's range. Still we got above the high point. The purple line is this week's Hakinyashi open on the weekly candle. So getting above that candle means we have a long upper shadow. We haven't had a long upper shadow the past few weeks. That's a positive sign. You can also see too, if you look at the weekly chart and take a look at the Hakinyashi, that's a very small body so far. Of course, the week's not over, but a lot of these times these bodies start off really big because of where the open is in the previous body. So they can start the week pretty big. We're starting the week pretty flat and already have a long upper shadow. So good signs so far from that regard for the market. Go back to the intraday chart. We're also trading right at this 4-week midpoint, and that give it a couple more days, and that midpoint's going to come down to here, or the top line's going to come down here, or excuse me, actually right to there, and then after another day, it's going to come down into this area, and it's going to be here for a while, right around this 281 level. So it's going to drop about 8 points, which means this dotted line is going to drop about 4 points down to 270, which would put us above the midpoint of the chart. So we'll see, depending upon how much we pull back. Like I said, I wouldn't be surprised if we don't get a short-term pullback, at least in response to Tuesday night's news. But as always, I don't expect that to last very long. I do expect a higher near-term low to develop and the intermediate run to start and get it back up above all of these lines. The brown line would be last week's high point, which again would close up above. That's the week. The brown line is the week with the lowest low during this pullback. So getting up above that level would be another strong reversal sign from a short-term perspective. You take a look at the volume today, and the trading range is predictably very light. 64 million shares traded. Trading range of 2.66 points, well below the average. Is not surprising. I would not be surprised if we get another day like that tomorrow. Obviously, well below the average. 64 million is way below the average. The ATR of 2.66 points is also way below the average, and actually is below 1% too. So again, peaking here at 2% is another good sign that we're not starting a bear market. Usually the bear market volatility spikes usually get up to about 3% or higher, get above 2%, the 2.5 to 3%. We did not get that this time. So good signs all aboard, but again, expect that again tomorrow because we have such a big risk event due up on Tuesday night heading into Wednesday. Volatility is predictably pretty flat. Again, it's not going to move very much tomorrow either. It's at 20, and on a relative basis, it's right at 1. So I still expect a volatile move to come out of Tuesday night into Wednesday. Again, don't put a lot of stock in the futures Tuesday night, as we learned a couple of years ago on the elections. So wait till Wednesday, wait till the volume kicks in, wait for the knee jerk, the buy the rumor, sell the news kind of phenomenon to occur, and then we'll see what happens. And again, the trend so far with volatility is to start to moderate, but we're not to the point yet where that moderate has solidified. So when it's still above 95%, when it's still around 20, that means still expect bigger moves to the upside and to the downside, even if that bigger move to the downside doesn't necessarily continue a bearish trend. If it just is a near-term pullback, it still will be bigger nonetheless because of how high volatility is. So it will cause a lot of grief. A lot of people will say, here we go, we're back to being bearish again. But unless that bearish move that produces a new low point, don't worry too much about it. So to summarize, the markets are starting this weak bullish trend, not strong enough yet to be the start of a new longer term run, but strong enough to have set that low point of last Monday morning, and now we're getting that near-term pullback to what would be expected to be a higher near-term low point that we can subsequently bounce off of and help bring that intermediate line eventually up above 50, and away we go from there. Right, of an expected 1 to 3 months move from there. So that's what we're seeing, and that's what's developing so far. Of course, today very, very quiet. Tomorrow probably be quiet too, ahead of Wednesday, which will be the storm. And again, don't get caught up in the initial reaction unless it produces a new low. Or if it produces a new high, then we're even that much more likely to continue to move up. But unless the knee jerk to the downside, which is actually what I do expect, it produces a new low point, then that will be your near-term pullback, right, to a new higher near-term low. Once the knee jerk is done, then the rest of the week, probably into Thursday, if not maybe Friday, that's when the true move will come up. We'll either start to bounce off a new higher near-term low, or we'll continue to push on down to 2,600, which a break below that changes the narrative completely. So what do you think? Do you agree with that or do you disagree with that assessment? There's a poll popping out in the top right corner of your screen right there. Click on that poll, on that link there. It opens up a poll. Then click either agree or disagree. If you click disagree, scroll down to the bottom, comment on what you're seeing that would suggest something different than what we summarized here today. All right, let's take a look at what happened here today. You can see MLPs, real estate stocks, so kind of your alternative U.S. stocks are rallying. There's your dividends as well, value stocks outperforming. ahead of an expected bout of volatility, right? And on the other end of the spectrum, gold, the dollar, agricultural commodities, kind of some safer haven areas lagging behind. So, a little bit of a risk appetite move. Of course, oil started off the day really strong, was up almost 2% before pulling back and finishing the day lower. That was really the only thing that made a major move. Everything else really tight, really tight. I mean, the S&P was your best performer on the equity level, but still a relatively tight move ahead of, and don't expect any kind of breakout moves ahead of Wednesday. And then Wednesday again, the expectation would be that we'll get some equity losses with at least a brief flight to safety before a knee-jerk reaction subsides and we really start to make the move coming out of the election, which for the most part, in fact, of all the midterm elections that we've had over the so many past years, they've all been higher a year later, and they've all been higher the few months later, right? This is the most bullish time of the presidential cycle. This quarter and next quarter and the quarter after that are the three most bullish quarters of the entire 4-year presidential cycle. And if we end up with what's expected to be a split Congress, of course anything can happen, as we found out last election, but if we end up with an expected split Congress with a Republican president, studies have shown, data has shown that that's actually the most bullish setup from a legislative executive branch combination for the stock market. It has shown to be to have strong bullish returns coming out of that particular setup for the next couple of years. From a foreign market standpoint, you can see over on the left Turkey and Mexico, which have been beaten up. Mexico more recently beaten up. You can see it still has the biggest 3-month loss out of everybody, and there's Italy also. So all these kind of beaten up areas, Turkey had been beaten up, Poland or Indonesia had been one of your biggest losers. They all rallied. So a little bit of a technical bounce. On the other end of the spectrum, the ones that have done well here, this would be India, sorry. Italy down here. The ones that have done well, Brazil, you can see Germany, Japan, some of these other major areas lagging behind. So, you're still, all these markets are looking very similar. In fact, you could probably almost say that the S&P is looking very similar to a lot of these foreign markets, because these foreign markets ultimately is what brought the S&P down, because they had dropped a lot earlier than the S&P have. And any bounce in the S&P will most likely come from bounces in a lot of these areas. You can see China already above its moving average, India already above its moving average, Russia breaking out a little bit above its moving average, and Brazil above its moving average, and some of these others getting pretty darn close. UK, Germany, Italy, South Korea all getting relatively pretty close. So, it kind of shows that, these might be what ultimately bring up the S&P 500, and of course, the big mover there that's going to dictate that relationship is going to be the direction of the U.S. dollar and what it does. And you can see a little bit down heading into this important week. A break back down below 96 will actually be a bullish phenomenon for the markets. Break back up above 97 and we hold this breakout, will actually be more of a bearish. Now you'll have some resistance at Fibonacci resistance at the 98 level, but still that would solidify this kind of breakout move instead of being a fake out, and would probably be more bearish for most of these markets. Put more pressure on these international areas and be probably considered more of a flight to safety type of a move. Be interesting to see what gold does if the dollar does react, because gold's been trying to form its own low point. If you look at a long-term view here, you can see it's been struggling to get off of a really deep low, and it's still below a downward sloping 200-day moving average. So it's kind of an tenuous bullish rise, a big spike. If gold jumps with the dollar, then you have flight to safety. If the dollar jumps and gold falls, and depending upon what long-term bonds do, then it might not be a flight to safety. It might just be a king dollar type of a story where stocks could still go up here in the U.S. if not abroad, and they would be led higher by these FANG stocks, these high beta, high momentum FANG stocks. Well, if you take a look at today's moves, you can see there was some pretty, I mean, as flat as the S&P ended up being, relatively flat as it ended up being, there was some bigger moves. Energy, which has been beaten up, or real estate, which has been beaten up, staples, a little bit of a flight to safety, financials doing well, utilities. I mean, you have interest rate sensitive areas on both sides of the equation, all with 1% gains or higher. And then lagging behind, you have your FANG stocks, all three of them down here at the bottom, all lagging behind. So again, that's not a bullish move. That's the kind of rally you expect eventually to see. But like I said, as we get through this expected risk event, don't be surprised if the initial burst, the beginnings of this long-term market sentiment run aren't led higher by these beta names before some of these other energy, materials, industrials, these names start to take more hold, especially if the cycle that we're in, the expected late cycle we're in, puts the pressure on the greenback. One of those stocks in the materials area in particular has been doing really well post earnings. You can see heading into earnings and coming out of it, as U.S. Steel is up quite a bit, up from 24, under 25 to just over 29, hitting a new high today, up above the Friday post earnings reaction high that we had. So lots of good technical patterns developing here on this stock. You look at it, it's Bollinger Band getting up above that upper, the middle Bollinger Band starting to rise, the lower band starting to rise too, along with the upper band. You still have some resistance in this area, and we'll talk about that here in just a second. You also have a DMI. If you look at the DMI chart, getting above 25 here yesterday or Friday, and then kind of holding that today. The orange line falling below 20. Positive development from a DMI perspective. You look at its market forecast. You can see it's rising and getting up towards. You got the near-term line up above 80. The market sentiment line is really low, but the intermediate line coming off. We're coming off of an oversold cluster again. If you look at the weekly chart, you can see we had an oversold cluster a couple weeks ago with a little bit of a near-term divergence on these lower lows and higher lows. And then finally, you look at the long-term, a couple more charts. You look at the long-term chart here, trying to get above that 50-day moving average, trying to get above last week's high point. And then you look at the, the three green arrow chart here. Let's go back to the three green arrows. And you'll see above the 30-day moving average, the 8 days almost about to cross over the 17. The next step would be those two to cross above the 30 together. And you can see the big time divergence you have here on the MACD. And the stochastics rising. So you have this kind of burgeoning bullish development, but again, it's kind of it's had a good run the past like 4 or 5 days. So instead of saying, let's go ahead and sell the 27 by the 25 right now, let's wait and sell the 26 and buy the 24. It's not giving me enough credit, but if we were to start to pull back, then we can get in. At 26. And if it doesn't pull back and it kind of breaks out, then that will kind of solidify us more for a normal setup at that point. But this kind of pullback move, we can say let's get in at a limit price of 50 cents. So that would require a pullback down to 27.27. You can see on an intraday basis that would put us down into this area, 27.27, back down towards this 4-week midpoint that we have. Because remember, that's going to drop here in a couple of days down to that high. It's always good to have the 4-week high point on the right-hand side of the chart than it is over here on the left. So good development there from a sentiment. But we pull back down to this area, then we can sell at the 26, and then you have a strong support, this old low point that can help you. And there's the break-even level for that. What would be that 26.24 short put vertical spread. So we'll see if that ends up playing out. And if it doesn't play out, like I said, and it breaks out, then we can set up for more of a traditional kind of a directional bullish trade, as it changes, as it solidifies its change in trend, gets above last week's high point and starts making a more of a sustained run to the upside. Again, wouldn't be surprised in the next day or two, kind of caught up in this market mayhem or knee jerk, if this stock doesn't pull back along with the markets, and we can get filled in at a good price at a lower strikes than what we can get filled in right now. Of course, you can always say, you know what, how about the 25.23 and put that at 50 cents. And you can see that would require a move down to 25.57. So that would be all the way down to here, and you can see why that would be a little bit tougher of a little bit lower likelihood of that happening than if we were to say the 26.24, get into there with a 50 cent. That gives us, like I said, 27.27, still in the upper half, still at kind of at this support. A lot more likely for a pullback like that to occur. We can get in at a better, at lower strikes, closer to where your support level is. All right, so that wraps us up for today. Love to hear your thoughts now. So click that link that just popped out there in the top right corner of your screen to participate in our forums on marketscholars.com. Let me know what you think about what we talked about today's video, about the trade idea, about our posture. Any questions or comments about anything I discussed, or any questions or comments about something I didn't discuss that you might have for me or our community, you can post there in the forums. Again, thank you very much for watching tonight. Remember to subscribe to our YouTube channel, click the thumbs up icon, comment below, follow me on Twitter for more content like this, and join our community on marketscholars.com as well as our community that we created on Facebook. Have a great rest of your evening, everybody, and we'll see you all tomorrow.